Damian Harrington, hello.
Good morning. Thanks
Uh,
for having me.
thank you for accepting our invitation on BiTV. You're the head of research, global capital markets, and EMEA for Colliers. Colliers are recently published. It's EMEA Market Snapshot for 2023. What are the biggest trends that emerged from the main European real estate markets close to 2023?
Okay, I think some of the big trends are quite well known now in terms of what happened to the investment market in 2023. But to recap, essentially, volumes were down quite significantly by almost 50% over the course of the year for Europe. I think interestingly, if you compare that with other global regions, you can actually see that the European or EMEA region fared worse, relative to 10-year average, 50%. Americas were about 66%, and APAC was closer to 70 plus percent. So different regions have fared differently and for very different reasons. Obviously, a huge part of that for Europe and the Americas has been the significant shift in interest rates over the course of the last 12, 18 months, which has been clearly significant, and the impact that has had on pricing, the uncertainty that it's brought to pricing, the uncertainty around when interest rates will start coming back, and that's going to be a key big driver trend for this year. It's created difficult, challenging conditions. It means that, certainly on paper, values have been cut quite significantly. So, I think across the board, on average, 30% hit to values, but that depends on asset type and location and quality of the asset. And we're still seeing some of that feeding through into this year, but we'll touch on that shortly. So, it's been quite a big shock to the market. Occupationally and economically, things have held up reasonably well. We got close to recession or technical recessions in some countries, and growth in Europe was very challenging. It's still going to be quite challenging for this year, and it's a balance of how you keep the economy ticking along and how you manage interest rates down, alongside all the big geopolitical events that are, happening very close to our region, and further afield, and what that's all going to bring for 2024. So less uncertainty than last year for this year, but there was a lot of uncertainty around how the market would pan out last year. Hence, volumes dropped so significantly.
Okay. Well, that's a very good global point of view for the European market and how it drove from 2023. Let's go a bit into 2024, which you started to show. The study shows that European markets are slowly recovering or in the verge of recovering. Can you give us a point of view for each country, which country has plateaued and which still need to correct in terms of value of assets?
Okay, so I would say the UK has broadly corrected. Yeah, I think pretty much across the board, across asset types, it has corrected faster than everywhere else, and that always happens, right? The UK tends to lead the continent in terms of both the shift in interest rates, hence the shift in pricing, and the adjustment to a new normal. So the UK is definitely more stabilized. It's interesting because you look at markets like London West End, which have been very, very active, but it's a very unique market in terms of the types of capital that want to invest and engage in it compared to many other kind of submarkets across the world, let alone within Europe. So there's different dynamics there, but the UK has recovered and repriced. The rest of Europe has still got a little bit of a way to go, but I think for industrial and logistics, we're generally there across the board. But then you look at offices, there's definitely still room for change there in terms of repricing. Retail balance, multifamily, I think, has got further to go in terms of a repricing as well. Interestingly, hotels is it's probably one of the more favorable assets. I mean, I know we're going to touch on what type of assets and locations, um, but yeah, I mean, there's a difference between the UK and the rest of the continent. I think most of the continent, the bigger markets, France, Germany, have still got probably more movement than the Netherlands. Again, there's other dynamics that will drive and change this. So the Nordics has repriced, but it's also influenced much more by the listed sector than other parts of the continent are. So there's just various different dynamics that can change the speed and the rate at which markets will correct or need to correct.
Yeah. Okay.
But
Well,
yeah, we've got a two-speed generally, two-speed.
okay, two speed with UK first and the other countries that are still needing to recover a bit and depending on what types of assets. That leads us to the third and last question about assets and in which location, which ones will be sought by investors in 2024. You started to answer us about the price recovery. Will this drive the appetite for investors for that kind of assets?
Yeah, absolutely. I mean, it's about the price recovery or the adjustment. It's also about the underlying fundamentals as to the balance between supply and demand and what the prospects for income growth are or rental growth within different sectors. I mean, again, if we draw on our Global Investor Outlook survey that we launched at the end of last year and the findings for that for EMEA specifically, we can see that industrial logistics is the number one favorable sector. And it's clear to understand why. It's repriced and it's got rental growth, or at least rental stability. Not as much rental growth as it had, but you can see on the value curve for INL, it's balanced out and it's starting to point back upwards. It's more challenging for offices, and again, you can see that in investors' responses. The consensus is that there's still a hit to values, but again, you've got this sort of strata of asset types and quality. So the real top end ESG compliant assets, very energy efficient, of which there are few. They're very favorable, but everything after that is more challenging, and there's a lot more price discovery to go on there. But that also suits the shift in strategy that we see for investors this year, where there's much more focus on value add, develop to core or opportunistic plays than there is on core or even core plus. Multifamily, bit of a split opinion, but largely balanced as to what the value shift is. But they said, but hotels, if you actually look at it, investors, even though it's not the most favorable asset type, they're more bullish about income or value upside in hotels than any other asset type. And if you look at the recovery in occupancy in hotels and RevPAR, and in terms of tourism growth, we're actually pretty much back to pre-pandemic levels. And it suggests there is more growth to come in that. So it's quite interesting. And for that, it's really the Mediterranean market, the tourist market, rather than the business travel market. So there's lots of opportunities across the board. It's going to be interesting to see how investors can and will deploy capital. We still have a refinancing gap. There are big equity gaps that come through this big price adjustment. That's going to create a lot of opportunities. And equally, we see more and more investors interested in the alternative or specialized assets. So a lot of interest in student housing, PBSA, data centers, senior living, life science, all of those niches of which opportunities are much more localized. They're not as ubiquitous as they are for some of the other sectors, but there's clearly a strong will and appetite to get into those sectors and understand how to get into them more, because they're not as straightforward given the operational aspects to deploy capital. So I think appetite is generally much more favorable than last year. I think we won't see a real recovery until the second half. But yeah, those are the asset types and the ways of investing that we'll see more of. So it's looking up is the good thing.
Yeah. We'll keep that for the end word. Thank you, Damian Harrington, for this testimonial. It's always a pleasure to have you on BITV. Um, we'll see if your outlook in the second semester in 2024 will reveal true, or maybe in 6 months we'll have you again on BITV.
Yeah, don't be too hard on me, but hopefully I'm close to getting it right.
Yeah, let's hope so. Thanks a lot.
Okay, pleasure.
Bye.
Thanks for having me. Cheers. Bye.